the CLS Market Outlook for the first quarter of 2016. I'm Todd Clark. In this report, we will review what worked and what did not in the global financial markets of 2015 and how CLS portfolios performed during the year. Next, we will talk with CLS portfolio managers, answering the questions we have heard most often from you in recent weeks. Finally, we will introduce our key investment themes for 2016 and discuss their impact on our investment portfolio construction. To begin, we will turn to our Chief Investment Officer, Rusty Vanneman. Rusty, welcome. The fourth quarter was a tough quarter in the U.S. stock market.
Thank you, Todd. It certainly was. For the year, domestic stocks had a subpar return, with domestic small-cap stocks underperforming large-cap stocks by a wide margin. International stocks fared even worse, with both developed and emerging market stocks down significantly. The U.S. stock market has officially remained in one of its longest and strongest bull markets in history. However, it has been a challenging time for global value investing. This environment hasn't necessarily played into our style of investing. At CLS, we strongly believe that global, balanced, risk-budgeted ETF portfolios help investors succeed over time. In recent years, being global and being balanced has not necessarily helped performance. Nonetheless, we believe this basic approach to managing money still makes a lot of sense. Let's break down our beliefs into a bit more detail as it informs how we approach managing money. We believe for investors to reach their goals, they need to take risk. The best way to take risk is to measure and manage it via risk budgeting. At CLS, our proprietary risk budgeting approach is applied to most of the assets we manage. We also believe ETFs provide numerous benefits for investors, including lower cost, tax efficiency, investment precision, and much more. Asset allocation and keeping the proper balance between assets depending on a portfolio's mandate, we believe works for investors. We believe diversification across domestic and international assets will provide improved risk-adjusted returns over time. Besides these beliefs, we also believe in the power of teamwork, and we believe in the power of discipline. All CLS portfolios are managed by a disciplined process. Discipline is important to long-term success. As investment manager and thought leader Cliff Asness said, "I used to think being great at investing long-term was about genius. Genius is still good, but more and more I think it's about doing something reasonable, something that makes sense, and then sticking to it with incredible fortitude through the tough times." We couldn't have said it better ourselves. Again, discipline is the key to investment success, and many investors just don't have it. The gap between market returns and investor returns, often called the behavior gap, is large in nearly every study that examines investor performance. When selecting who will manage your money, it is important to consider other factors such as investment philosophy, culture, and process. Discipline to reach your long-term objectives overshadows any short-term performance.
Thank you, Rusty. Earlier this week, several members of our investment team sat down to answer some of your questions regarding our outlook for the markets in 2016.
As we all know, many people are wondering what CLS sees for the road ahead. Let's review some of the top questions we've recently received. Paula, we're 9 years into a bull market, and stocks aren't exactly cheap. What do you expect?
You know, Rusty, I think that investors are just going to have to temper their expectations for U.S. market returns going forward. You have valuations which are slightly on the rich side. Yields are lower than historical averages. And then you have growth expectations that is also lower than average. You know, I think that we're going to still see positive returns, albeit just a little bit lower than average.
However, one thing we are or should expect is higher market volatility. In fact, when you look at the markets, relative towards historical average, volatility clearly has been much lower over recent years.
Joe, I think you're absolutely right. And then you also have the seasonal factors that come into play. Usually beginning of the year, those are positive. And then also the beginning of the year kicks off the presidential cycle.
Yeah. That's true, although that presidential cycle tends to run counter trend in the first half of the year. So when you net all of those different cyclical factors out, I think you're looking at basically a wash. Where I'm more interested in is the systematic factors, and the one we see most strongly in the markets as an opportunity is international markets. Our internal return estimation system suggests that international markets could outperform domestic markets by up to 8% per year over the next 10 years. That sounds huge, but even if we're just half that amount, that would still be a substantial gain for investors.
Okay, now turning to the bond market. Josh, what are the expectations for 2016?
So we expect short-term interest rates to continue to rise, but slowly, as the Federal Reserve continues to increase rates in 2016. For the long end of the curve, we expect interest rates to be more or less range-bound and not increase substantially from their current levels. And that's primarily because of just mixed economic data that we've been seeing recently. So while we think that bonds remain a very important part of a balanced portfolio, and we actually expect returns to be somewhat higher than many other investors, I think moving forward, we're still looking to increase our exposure to alternatives.
That's right, Josh. Alternatives are really a very broad asset class, and that's important to keep in mind when people think about alternatives. And a lot of these are very dynamic strategies that can provide positive returns in rising interest rate environments, as you just spoke of, and even during falling equity market performances, which we've seen in the past, and we've seen alternatives respond well in that light. Going into 2016, we are looking at the alternative universe for areas and ways to diversify. These asset classes have low correlations with traditional bonds and stocks, and we think that can provide a positive benefit for investors going forward, especially in a low return environment.
Speaking of commodities, what about their outlook?
Right, so two key thoughts for commodities. First off, we think that investors should have a strategic allocation to commodities for the long term. Second, we think that the outlook for commodities now, with commodity prices as depressed as they are, and inflation expectations as low as they are, is a lot higher than it has been in the past. And it's beginning to creep higher than traditional asset classes such as stocks and bonds. But it is definitely something we are considering and looking at in portfolios for 2016 and beyond.
Before we wrap up, I have one more question for you, Joe, and that is about smart beta ETFs. What exactly are they?
Well, Rusty, I think that's a great question. The way I like to think about smart beta ETFs is that they really are the essence of active management, but at a fraction of the cost. And so, for us, especially as, risk managers and ETF strategists, I think the value associated with smart beta ETFs is really that they're institutional quality tools for performing risk budgeting activities.
That is a great tool for us as we move forward. I'd like to thank each of you for your insight as we move into a new year.
In our final segment, we will introduce our 3 investment themes for 2016: international opportunities, creative diversification, and the X factor. Rusty. Fox canceled the X factor, so I'm hoping you're taking this in a better direction.
Well, Todd, we do have a pretty talented group of investment professionals, but I think their talents are probably best applied somewhere else besides singing. No, the X factor I'm referring to is in fact about smart beta ETFs. As we discussed in our Q&A, these ETFs have a rules-based approach to building a portfolio, which emphasizes a factor such as value, growth, or high quality. Since we expect lower U.S. stock market returns in the year or years ahead, and will therefore be emphasizing these factor-based ETFs, as they capture the essence of active management, but at a fraction of the cost. We believe this emphasis will enhance returns in the years ahead. In a low-growth world, valuations, yields, monetary policies, and reforms play greater roles, and international markets are more likely to benefit from these factors than U.S. markets going forward. Our second investment theme is international opportunities. A diversified approach to international investing may be complemented by targeted allocations in particular countries, regions, and sectors. We expect wider performance dispersion between countries when reforms and policies have an outsized effect. Our final theme for 2016 is creative diversification. Given the low level of interest rates, we continue to be creative in how we diversify our equity-dominated portfolios. We can do this in 2 ways. First, we can be tactical in our fixed income exposures, which we have been. We have actively managed our duration, in other words, our interest rate sensitivity, our credit and sector exposures. Second, we can use alternative asset class segments and strategies. This could also mean increased exposure to commodities, which have been beaten down over the last several years. It's going to be another exciting year, and I'm excited about how our team is approaching the challenge and the opportunity that lay ahead. As always, stay balanced.
Thank you, Rusty. That concludes our outlook for the first quarter of 2016. Our next market outlook will be in April. Also, check back with us at the beginning of each month for our monthly market review, through which we'll give timely updates on portfolio positioning and how we're specifically applying our investment themes. From all of us here, I'm Todd Clark. Thanks for watching, and thank you very much for your time and trust in CLS Investments.